In today's video, we're going to discuss how to get more out of our TSLY position. We're trying to play Tesla through TSLY, but now tech is having a big run, so we want to get more out of tech and also catch up in performance to the NASDAQ. We've been talking about that for the past few days on this channel. How are we going to catch up to the NASDAQ? And Tesla is a good percentage of the NASDAQ, about 3 to 4%. So we need to have some Tesla exposure on. We make over $100,000 per year in dividends. TSLY has about a 40% dividend, so it contributes to this number greatly. And we've also added other yield max funds, Aptly, NVIDIA, OARC. They all have 20% plus dividends. But today's video is just going to be about TSLY and how to get more out of the position, okay, through some interesting strategies that I think you want to stick around for till the end of the video, okay? To get this $100,000, we use margin at this channel. So this purchasing power of $549,000, for every $1 you put in your account, you get $4 in a brokerage account. So depending on which brokerage house you go to, how much money you have in your account, you can get $4 for every one. Every one will do it for you. You just have to pick the right brokerage house. And I simply use this margin, this purchasing power of about $250,000 in margin, to get this $116,000 in dividends, and then the dividends pay back the margin. So if my margin is $250,000 and the dividends are $116,000, then we pay back the margin in less than 3 years. So that's the strategy at this channel, and my performance and value shows that we're beating the market with this strategy. We're up 15% for the year, and the Dow's up 7, the SP is up 10, and the Nasdaq's up 23. If you need help with margin, please email me at aikentod48@gmail.com. I have margin guides. I also have Cornerstone e-guides if you're interested in playing Cornerstone, which is our largest fund. It's a 4-star fund that drips its dividends at NAV. So that's how we're getting this performance. We struggled a little bit because of IEP as of late. You're wondering what happened to my performance drop. We were almost in line with the NASDAQ, but IEP has been falling the last few days, so that's been dragging on my performance. Here are the drip shares of Cornerstone. At the $6 lots, these $6 lots, $6.49, anything in the sixes, that's the NAV. And the NAV here is dripped. Every month, my dividend is dripped at this $6 price. So if we go up to Cornerstone here, excuse me, and we look at these $6 prices, $6 here, that's a 19% gain, 19%. So they drip our dividends, all these sixes, at these double-digit gains. And I'm sorry, guys, if you're already aware of the drip here, but many people are new to this channel. Every day it's a bunch of new people. Rather than subscribers, they come around later for some reason. It's always, when I look at my analytics on YouTube, it's always recommendations to new people. So anyway, so I have to say this to everyone. I drip my Cornerstone dividends at 21% dividends. It's a 4-star fund. That's how I get my performance. All the dividends are dripped at NAV. We have about 400 grand in these Cornerstone funds. Anyway, back to TSLY. So it pays us about a 40% dividend. And if you want to know more on how TSLY works, see my past videos on TSLY. That'll show you exactly how it gets its 40% dividend. Our margin debt here of $255,000 again is going to be paid back by our dividends of about $15,000 right now. And when NVIDIA and Aptly register their dividends, that number will be much higher. So, okay, back to the subject. So NVIDIA, how do we get more? TSLY, I'm sorry. How do we get more out of TSLY? I'm thinking about NVIDIA because we've had a great day, great last couple of days in NVIDIA. And we'll talk about that on the next video, okay? Today's video is about Tesla, how to get more through TSLY. And then without further ado, I'm going to tell you, I bought some Ford, okay? I bought Ford and I bought Tesla. So Ford it fits my bills. It fits the needs of my channel over here. It has a 5% dividend. Plus Ford is cheap. So I started off with $500 of Ford. I could buy 1,000 worth, but it was up 5% today, so I want to wait a little bit. I also need consumer cyclical because Whirlpool is our only consumer cyclical play, so I could use having another Ford. But the thing is I have a short for TSLY and through TSLS. So I'm losing on this short. I'm down 11% in my short. So I want to have a short in TSLY through TSLS because I have 8,000 in that position. I want to have some sort of short. But I don't want the short to just go to go against me for no reason. Since TSLY is not going to move up big because upside is capped with covered calls, I don't want to just lose into an incessant short of just nonstop bleeding to the downside if Tesla really rips to the upside. So I bought Tesla to cover that. So as you can see, we lost 34 in the short today, but Tesla, I made 26. So now the gains are pretty much negligible. Okay, and if I were to hold this, it's not a lot of money. I know I only have 500 in each because the majority of my money is in TSLY, about 8 grand. So if I put some money in Ford though and TSLY, they should offset the losses of TSLS. Plus, over time, you could see them even, grow to something substantial. Many people say if you just bought one share of Apple, when it first started out, look what you would have now. So Tesla still fits that bill after the large pullback. Even Ford down here at these prices, you could buy Ford for a multi-generational buy here. It has a 5% dividend. It says here, go double check on that on your own because sometimes E-Trade glitches on the dividend. So don't quote me or get mad at me if that's not the exact yield. 5%. And look, it's cheap on the chart. It's at 12 and it was just at 20 last year. It spiked up to 25. And historically, this is really cheap for Ford. Ford is a best of breed, okay? So they partnered with Tesla recently on their charging station. So that's going to be a positive for both companies. It's going to bring in some extra cash flow for Tesla, and it's going to help stabilize the EV network, I think. It'll be better for both companies. And it's going to give Ford some more growth prospects. Ford is up against resistance here of that blue line, that 100-day moving average, it looks like. But it still has resistance to go at 13. You could also sell puts on Ford here and pay for your position. I might actually consider doing that on any dip, selling puts, because it has a nice dividend, 5%, and it's still cheap. And look at where it was. It was at 17. Look at it on a max chart, on a max time frame. It's from 2014. It's cheap. That's a 10-year chart. Let's look at a max chart. It was, in the 90s, it was at 30. So Ford is cheap. It's been struggling for many years, but with EVs, it could have a renaissance of sorts for the company. Could be being reborn again. So I'm hedging my short in TSLS with Tesla and with Ford. And Ford's also a nice pair trade. It's a way to trade against Tesla. Maybe Tesla dies one day and Ford takes over. It's a good pair trade. So I'm playing these strategies on top of my TSLY position. Also, we're at 0.61 today, which is, I understand, underperforming the market. As you can see up top, you can see we're underperforming the market. That's due to Cornerstone underperforming today, but Cornerstone's been outperforming the last few days. So I think that's all is fair there with Cornerstone. So that's how I'm playing TSLY, okay? We have the 8K in TSLY right here, as you can see. It was up 1% today for us. We're up 2% total in the position. We have 8K in TSLY. And I want to have some sort of short to protect myself in case we fall, because I'm in margin. I don't want to risk anything. If you're not in margin, you probably don't have to worry about shorting a Tesla unless you have too much concentration risk in Tesla. We only have we have less than what the indexes have of Tesla, so I feel like it's not too risky. And then to hedge out that short, TSLS is the short. To hedge that, we bought Tesla and Ford. So that's the way I'm doing a pair trade against that. These could actually end up turning into big gains over time anyway. Even though we're not in for the gains, we're in for the dividends. Those dividends are worth way more to me than gains, since banks don't take gains. They take stock dividends or they take paychecks. They don't take ups and downs and trading in the market. I've tried it before. So that's the key to this channel. We use the margin to get more income, which then pays off this margin debt in a few years, and then we're left with the cash flowing assets all to ourselves. Again, if you need help with e-guides, email me at akintodd48@gmail.com. I usually sell each e-guide for $50, but I have a package deal where if you buy all four, not only do you get it for $100 for a limited time, since my channel is starting out, I'm doing it for $100 to see how this goes, but you also get my phone number with it. So I think that's the reason why most people have purchased my e-guides, is because they get my number, and they can call me anytime. They can call me to deal with Cornerstone rights offerings, to talk about margin. I've said this in many emails. For all you guys that have emailed me and I send you back this standard message, that's my message, but I mean, it's the truth, and you're all growing with me. So I want to be transparent about this message. And I have to have e-guides because you guys ask way too many questions. I can't get to all your emails. So like some people email me today just with general questions. Please, I mean, maybe look at purchasing an e-guide, and that way you get my number. If you purchase all 4 e-guides, $50 again for each guide. If I go any lower on that price, then there's not going to be any value in the e-guide. If I go any higher on the price, I think it would be a deterrent. So 50 for each guide, I think is fair. I put a lot of time into writing each e-guide. And then to make all 4 guides $100, I think that's more than fair. It's a $200 value in 100. And you're also getting my phone number. Thanks.